Think. Act. And prosper. You are now tuned into the Money Level Show.
Hello everyone, welcome to the Money Level Show. If this is your first time watching this channel, here we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies. And today we have the opportunity of speaking with Sean Wade, who is the CEO of Power Metal Resources. Sean got started in investment banking back in 1993 and eventually transitioned to mining. He has played many critical roles in different mining companies and is now the CEO of Power Metal Resources. Power Metal Resources is an exploration company that focuses on different commodities such as gold, uranium, cobalt, nickel, and lithium. The diversity in metals that this company brings to the table makes it even more intriguing as an investment option. So today we're going to talk to Sean about the macro setup for natural resources, the exploration space, and how these resources are critical to the new world to come. So without further ado, let's get to the interview. Hey Sean, feels like I haven't seen you in a little while. It's been about a month, huh?
Well, it was, yeah, it's a month ago or so. We were in Florida together, wasn't it? And yeah, it's lovely to see you again. Really great to be here.
Yeah. I was going around trying to get all these interviews for the audience that don't know, and then Sean and I, we were bouncing back and forth multiple times, and then we finally made it happen. So that was a good thing.
Great to be able to do it.
So Sean, from what I was reading, you got your start in investment banking back in the 90s. So what was that like, and how did you end up transitioning to the mining commodity sector?
Well, that's a great question. I mean, it's I look back now and it seems like it is a very long time ago and a different age really, and in many ways. So I started just almost exactly 30 years ago at a firm called Cazenove and Co. in London, which was one of the preeminent stockbroking firms in London in those days. So that was really, I mean, Cazenove at that point wasn't really an investment bank as such. It kind of emerged, it evolved into one sort of during the time I was there. But at the time, it was a sort of partnership of stockbrokers, which meant that we would help companies raise money in the capital markets and obviously advise institutional investors on their portfolio management. So it was an extremely good start for me for career-wise, and I was there for 14 years, and I learned a tremendous amount about what investors are looking for in their investments, how companies operate, and how successful companies can get their message across to shareholders and ultimately deliver value to the shareholders, which as we all know ultimately means helping their share price go up. So it was a great period and great training for me. I moved then from Cazenove to another firm where I was for sort of 5 or 6 years, and after sort of 20 years in investment banking, it was a career move for me ultimately to transition from there into the corporate world. And so for the last 10 years or so, I've had a number of roles in both sort of investor relations side and business development and sort of executive level roles, which has culminated ultimately in me taking this role at Power Metal. But there is a big intersection between investment banking and corporates in terms of the relationship that companies have with the capital markets. And I think it's important for investors to understand that there's a very big difference between companies that have a great story or a great sort of macro case and companies whose shares go up. In order to achieve the latter, you have to have the right capital structure. You have to have investors who believe in the story and want to continue to invest, and also the ability to reach new audiences for the shares. And of course, that's largely what we were in Florida to do, those few weeks back. So I think a lot of the disciplines that you learn from investment banking are immediately transferable into the corporate world, and that's what I hope that my experience can bring to this role.
Yeah, that's really good. It's kind of interesting. You mentioned that you may have like the macro story, but how companies' capital structure like that really matters as well. And I was recently doing one of Rick Rule's classrooms, and he talked about alpha versus beta investors. And me, I'm more of a beta investor because I look at the sector. I'm like, okay, this sector should outperform the S&P in a certain time. And I know Rick is more of an alpha, and so he vets each company. And so like those companies that are at the symposium are companies that he's vetted. And so that's good to know that you have that background, but also like even Rick, he's like, vouching for y'all about having y'all at the symposium.
Yes, that's right. And look, it's a really important point that you make, and that Rick's making there, because investors will often start with a theme in mind, that they're saying, well, we believe, for example, in the transition to renewables and the sort of green revolution and so on. But how do we necessarily invest in that, and how can we make money in that? And that's where the stock picking element really comes in. And of course, that's largely what the symposium was all about. It set the scene for what the big investment trends are in the commodity space or the resource space. But then which companies do I actually buy shares in order to make money out of that? So that's how that's why the symposium was so successful for us, because people would obviously hear the macro case, and we heard from Robert Friedland, for example, who's talking very eloquently on the subject, Rick himself, obviously, and many others. And then to be able to then subsequently engage directly with the investors to be able to talk about our specific company story. Therefore, we're able to cover both those sort of alpha and beta sort of angles. So, it's very important that people look at the shares that in our shares or our company in that context, and hopefully they'll see an opportunity to invest through us in those very important trends.
Yeah, agreed. And another piece about the how your background even helps with, you being the CEO of Power Metal Resources, is that exploration companies, they need the capital. And so, and you have this extensive background in raising capital, as in investment banking and such like that. And so that seems like a good benefit for Power Metals.
Yes, I hope so. Yes, I mean, look, capital structure is everything, right? I mean, you've got to have enough cash in the business, not just to meet your ordinary corporate overheads. I mean, you think about cost of office space, obviously people's salaries and so on, but also to achieve your exploration objectives. And this is a really, really crucial point about our model, and I'm so glad you brought it up, because we are a project incubator. I mean, Rick describes us as a junior merchant bank in the resource space, which means that we're not conventionally like an ordinary junior exploration company. And what I mean by that is, a junior explorer will seek to obviously do the initial exploration and discovery of the commodity that they're searching for, then seek to develop that into a resource definition, and then subsequently obviously into the mine development, and then ultimately into production. Now, it's very hard to pull all that off. I mean, to make the discovery in the first place is hard enough in itself, and each stage of that process is highly capital intensive, and also is a different investment phase for that company. So they will attract different investors, at different points in that life cycle. It's obviously a great model, and it's a model that works, for a lot of companies. But we're doing something slightly different. So, we've got a whole collection of assets, and we can obviously talk about the commodities that we focus on. But we've got a vast number of different projects, all at various different stages of development. And what we're seeking to do is to add value to those projects while they are under our ownership, or while we have major shareholdings in them. And we do that through methodical and cost-effective exploration, typically. And then, if it's an early-stage project, that would involve, for example, geophysical work, geochemistry, soil sampling, etc. But then we look to monetize that over time, and that's going to be through either an IPO spin out or a strategic joint venture, whatever. Now the point on this is that when we seek to monetize the asset, what we're essentially doing is we're passing to a new set of investors, usually the next phase of capital investment. So an example would be our nickel asset in Malopo Farms in Botswana, for example, where we've undertaken 2 major drill programs where we have a fantastic level of data and understanding of what the project is. And we're now looking for a strategic joint venture partner to essentially, help us pay the very large exploration bill to drill out and define the resource. Now, I'm not expecting our shareholders to have to come up with that. That's going to be either the shareholders of another company, or it's going to be shareholders in a new vehicle, or whatever capital solution we devise for it. And this is the very important part. So the network of the corporate finance angles, if you like, are about saying, okay, what are we trying to do? Do we have the cash for it? If we don't, who's going to pay? How do we construct a model that essentially reduces the risk for our investors for having to essentially fund that exploration and development, whilst at the same time maximizing their exposure to these assets? So essentially, what I'm saying to investors is, look, this should be in a good market, in an ordinary market, we should be a relatively low risk way for you to invest into and make money in the natural resources cycle, because the large capital expenditure bills typically are done by somebody else, and when we've IPO'd a business, that is typically where the capital investment comes. So we are running a relatively capital light model, and that's why, as I said, this is what Rick refers to us as the junior merchant bank, where I know he's made a lot of money in the past with these kind of models, and we're hoping to emulate that. So yeah, I mean, capital structure is important. The network of investors who are able to whose capital we can access at those various points is very important. But it's also very important that we understand the geology and so on, what we're trying to do. So we employ a very highly qualified geologist, and we have also lots of contractors that we use externally to help us. So we're not just financial investors. We are a mining company with expertise, but I think there is an important overlay on all of that of finance and capital structure.
Yeah. I wholeheartedly agree with that. Especially and those in the audience who I'm surprised I understood everything you said, most of everything what you said. So I'm gonna just break it down for some of the audience. But it's definitely good because you're not passing on certain costs of projects onto shareholders, which means where you got to raise more money, so you either dilute shares or or whatnot, which ultimately impact your current shareholders. And so you're thinking creatively of how to pass these costs off onto either the next business that may be acquiring a project or something, and being creative in that way. So, and I understood that correctly, right?
That's absolutely right. And look, I mean, we have raised money in the past, and obviously most recently back in May, which Rick participated in. But my objective is to try to reduce the amount of capital that we take in at the power metal level from the market, so that our shareholders don't suffer too much dilution, but to deliver value for them, as the cycle develops, and to, as you said, to pass those big capital costs on to our subsidiaries and our spin-out vehicles. So, a good example is Gold Metal Resources. We IPO'd back in May. We retained something like a 60% shareholding. Now that company ultimately will raise some money. I mean, some of it we're expecting hopefully to come from US government funding, but there will be some objective that will need some external shareholder support. And that is, as it were, Gold and Metal's job to do. So we're there as a shareholder, but we're not. Those assets don't sit within Power Metal anymore. They sit within Gold Metal. So if you strongly believe, as we do, in the high quality tungsten asset, for example, that Gold Metal has, then you will, as an investor, you will participate specifically in that vehicle in order to make your money there. Or if you want to look at the Power Metal story, you can say, well, they've got 60% exposure to Gold and Metal. They also have exposure onto these various other assets. But we're the merchant bank, if you like, that's kind of sitting behind all of that. So yeah, it's it's a model that, as I said, does work and where people have made a lot of money. But you do need to have, like with anything across money, you need to have good market conditions, and those conditions have been a bit tough. And we're hoping that we're on the upturn now. And I think the messages that we heard at the conference in particular, the symposium, were very positive in that respect. I mean, certainly I came out of there feeling a renewed sense of optimism that the good times, as it were, are just around the corner, and I hope that's something that's shared by your listeners.
Yeah, agreed. And I appreciate your honesty, and especially in looking at like market conditions. Like we do talk about that quite a bit, and just like what we're expecting. Are we going into recession or not, and such. And so, but we're all like, well, I wouldn't say we're all. I can't speak for every single listener, but a lot of us are really focused on the commodities bull market, because we know that even coming out of recession, like there's a boom in employment, boom in resources, and financing projects and things of that nature. And so like it's almost like the reset before the boom. So we know that we have the hope that around the corner these macro cases and theses for like uranium and many other commodities is going to play out, plus with the government's climate change goals and things of that nature. Like it has to happen at some point. So I want to jump into some of the natural resources that you all focus on, where you're interested in, and then also some of the projects that you're currently involved in. Hello everyone, sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brian Lundeen and his team. Brian is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at, as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now, let's get back to the interview.
Yes, well, look, I mean, thank you, and I completely agree with everything you've just said there, and I think you set out very well for listeners, what the macro background is, and where we currently sit in the sort of more short term part of the cycle, and but to get down to the crunch here, I mean, how are we going to make you money, as a business, and in terms of, it's all very well setting that macro out, but what is our participation in it? And I think one of the things that, and if we refer again to Rick's symposium, one of the things that came out of that very strongly for me was uranium. I mean, I know that, Rick has historically been a big uranium bull. I know that there were other uranium companies at the meeting. And I know we had sort of several sessions talking about global energy policy and the energy mix and energy generation. And I think, it's now becoming, to me, to be very clear that that nuclear energy is now widely accepted as an important part of the energy mix. I mean, there was some debate about that, some years ago, and in particular, in Europe, as you know. But I think the Russia-Ukraine situation has really brought nuclear back into focus as an important source of baseload electricity, and obviously the carbon emission point. So we're making it, or have made, a major investment in uranium, and we're going to be able to talk a lot more about our uranium portfolio as we go forward. So just to give a very brief summary, we're focused on the Athabasca region in Saskatchewan in Canada. So we have 17 projects, 17 licenses in and around the Athabasca Basin, which a lot of your listeners, I'm sure, will recognize as probably the premium address in the world for uranium exploration. I mean, obviously, one thinks of Cameco in particular as as a very big participant in that area. We are at the moment undertaking an early stage exploration program, and that's going to generate some good news for us, hopefully, and lots of things to talk about, and lots of opportunities for us to update investors. But we're also planning a partial spin out IPO from that project portfolio. Now we're going to be able to talk a lot more about this as the as the IPO goes live. At the moment, we're doing a lot of the kind of the background work, getting that deal prepared. But it's going to give our investors the opportunity for, if they want it, a pure play uranium exploration project in this great address in Athabasca, and it'll be the only in London. It'll be the only Athabasca focused exploration portfolio available to investors. So that's a great selling point, number one. So it's a pure play opportunity. Number two, it'll also, this company, this small company called UEE, will obviously have its own market cap and valuation, and that will help our investors when they look at the portfolio overall to be able to have a better idea of the valuation of it. So, we're vending some properties into this new vehicle. You'll be able to read the valuation back to the bulk of the portfolio, which will still sit with 100% within Power Metal, and give investors a better idea of what power is worth. Because inevitably with a company like ours with assets kind of everywhere, some of the parts valuation is really the way that investors would look at us. So the uranium portfolio is extremely important, and it's going to be a very big driver of value. We also have another IPO that's underway at the moment called First Development Resources, and that's in Australia, in the Northern Territory, and in Western Australia. And in addition to potentially a very high quality gold asset, you've also got exposure there to lithium, rare earths, and also some uranium, which clearly are all important parts of that energy transition point that we're making. So there's two immediate opportunities for investors to participate in that, and both of which are going to be big value drivers for the parent company overall. So we are very focused. I mean, we talk about power metal resources, the resources that power the planet, and we're very focused on that that transition phase in the world economy. So uranium is a really important part of that. Nickel, I mentioned our asset Malopo Farms in Botswana. Clearly, nickel enormously important, in the whole electric vehicle transition as well. So we talk a lot about that, and we're hopefully talking a lot more in the coming weeks about our progress there and what investors can expect going forward. And those are really just sort of two examples of basically where we're generating news, and we're generating updates and progress for shareholders, and where those assets are firmly entrenched within the green transition debate.
Yeah, that's good. That's good. Appreciate you sharing that. Could you speak to just the nature of your relationships with like governments or any jurisdictional risks? I know that some, a lot of investors their minds tend to go to that direction. Like, okay, if you're in certain regions, is there any jurisdictional risk or, governmental risk and such? And so what's your relationships like with government and jurisdictions that you're focused in?
Well, the good thing there is the straight answer is extremely good, and that's and one of the really plus points about this company is the jurisdictions in which we operate are some of the most attractive and safest in the world in terms of being able to actually undertake our operations. So Saskatchewan, I mentioned, obviously, in respect to the uranium portfolio, that's fairly obvious. Through gold and metal, we've historically had very big asset set in the United States, and Nevada in particular. I mean, Nevada is, I think it's right up there as almost at the top of the Fraser Institute jurisdictions for mining. I mean, it's probably the leading mining state in the United States. Australia, clearly the history there in respect to mining, goes back many decades. It's well understood. There were very clear rules and guidelines and so on as what you need to do and how to behave. It's extremely well established, and again, a very, very safe jurisdiction. So you've got Canada, US, Australia, all great geographies. In addition to which, we have some assets in Botswana, as I mentioned, Malopo Farms. Again, probably Africa's best mining jurisdiction. Very, very easy to operate there, and a government who really understands and is very committed to mining. So again, very straightforward. But this also gives you the opportunity to mention something that we haven't picked up yet, which is our investment in Saudi Arabia. So we've announced recently that we're looking for exploration licenses and business opportunities in Saudi Arabia and Oman, which again, came up a lot. I mean, I know Robert Friedland gave a long talk about Saudi in particular in his talk at the symposium. And like him, we believe that there's early mover advantage to getting in Saudi Arabia, and so we're at the moment in conversations with various government agencies, potential partners, and other entities that would help us give our shareholders exposure to mining in that region. And so far we found what everybody told us we would find, which is an incredibly straightforward and open process with a government that is very, very keen to transition its own economy away from, slightly as much as they can, away from petrochemicals, more into green metal transition opportunities. And we've been extremely pleased with the response we've had so far. So there is clearly, both Saudi Arabia and Oman are both very, very serious about building a mining industry. And I think over the next, decades, I guess, you're going to see both those countries develop into high quality, safe, and easy to operate mining jurisdictions. So we're really, really pleased. We're looking to get in at an early stage, and I think in both Saudi and Oman, I think we're going to be able to make shareholders create a lot of value for our shareholders with some opportunities there. But you're absolutely right to bring the subject up, because you can find fantastic grades and great projects and so on all around the world, but the ability to actually operate, get licenses, mine, get money in, get money out, and all these things are very, very important considerations when you make an investment. Now, it's not to say that we wouldn't ever look at some of the more challenging geographies, if I can put it that way. We look at things everywhere. We look at things all the time. But I think it's one of the things that is vital for the board to get comfortable on, as much as it is the economics of an asset. Is our ability to actually monetize that value. And because we are quite a sort of nimble business, we look to invest, we look to crystallize that value and monetize it. We need to be able to get in and get out, of assets and projects. And so government relations and ease of doing business are very, very important considerations. And as I said, at the moment, we are operating in very safe places. And in Saudi and Oman, I think, we're looking at one of the really strong emerging geographies for money in that respect.
Yeah. It seems like what I get from that is that you're managing risk really well. And some people, some investors, or speculators, would speculate in a company that may be in a more risky area that doesn't have any certainties. Ultimately, as the world continues to change, like, someone has to be the guinea pig for, whatever country, if they want to operate in that country. And so, but it sounds like you're mitigating risks by, being in safe jurisdictions and giving your investors peace of mind being in those areas.
Yes, I think so. And as I said, it's a really important part in the investment message. People want to know that their money is safe. It's you want to do two things. You want to make people money. That's fundamental. But you want to also be able to do that with as low risk as possible. And certainly speaking to individual investors, at the conference, it was very important for them to, they all want to obviously make money, but they also want to preserve it once they've made it. And I think what we're trying to offer as an investment is not something with enormous volatility. Not something where you're going to get a lot of surprises. What I want people to look for with us is, high quality assets, managed by experts, but where, we add value and we monetize that value. So, what I point investors to is look at our balance sheets, look at the actual net asset value of the business, and look at how we grow that over time. And the actual shareholders' equity of the company is the measure that I really look at more than any other. Look, the share price is extremely important, clearly, and that's why people invest. But if I could control it, believe me, I would. But I can't, and I shouldn't obviously seek to. We don't, clearly. No company should try to manipulate the share price. But what you can do is focus on delivering value to the business and focus on expanding the balance sheet and the actual value of the assets under management, as it were. and then the market will take care of it from there, and that's why Rick has invested. That's why a lot of our new friends in Florida are investing. I mean, I've received emails from people that we met saying that they're looking to buy shares in the company, which is obviously fantastic for us. And we have a number of investors that have come onto the register recently, and some of your listeners, if they follow our news flow, would have seen that the directors, of which obviously I was one, bought shares in the market recently, because that's important. That underlines our confidence in the business, that we're prepared to put our own money in and say, look, I think the shares are cheap. I think we can all make money here. And obviously, when a director buys shares, it's a very public event, clearly. And I hope that people would see that as a positive statement of intent by the board directors, who are saying, look, we want to join obviously shareholders on this journey, but we also believe in the company such that we're prepared to invest our own money. So we've done that as well. And I've now got quite a lot of exposure, which I'm pleased about. And I'm quite a big shareholder now, so I'm hoping that this is a success for all of us, and that we all get to benefit.
Yeah, that's good. That's good. Appreciate you sharing that. So where can people find your company? Where are you listed?
So we are on what is called the AIM segment of the London Stock Exchange. So we're a London listed company, and at the moment that is the way to buy the shares. So I know a lot of people we spoke to said that they had no problem being able to buy shares in London, and that was that's no problem. However, there are also investors who would prefer maybe a dollar denominated asset or something that trades within their own time zone. So that's why we are applying for a US OTC listing as well. So that's something that we are hoping to deliver soon. I mean, it's a relatively complicated process. You have to go through a lot of scrutiny and due diligence and sort of stock exchange type stuff. But that's in process at the moment, and we hope to be able to update the market soon on how that's going. But it is our objective to do that. Now, obviously, we can't make promises. If for some reason we don't fit the criteria for the exchange, which is possible, then that will be that. But I'm confident that we can deliver this for shareholders, and hopefully that will give more North American investors the opportunity to participate, buy shares, and will increase the liquidity in the stock. But as it stands at the moment, if a shareholder or one of your listeners is able to buy shares on the London market, then you can find us listed there. The POW is our code. You can find a lot of shareholder information on our website, and of course, we're always available to speak to individuals and help them, to understand either where the shares are traded or how they trade, or any shareholder information or IR help we can give. We're always very, very happy to do so. And me too, my colleague who was also at the conference, who you remember, we talked together, is very keen to help shareholder outreach, and we answer everybody's emails, and we produce lots and lots of material that hopefully helps people to understand the business. So it can look a little bit complicated when you first look at it. There's lots of projects, and lots of which are the big ones, which are the really important ones. But fundamentally, what I want shareholders to really take away is, look, we are a junior merchant bank in the resources space. We are an active investor in mining assets. We take assets, whether they be in Africa or Australia or New Zealand or Canada or wherever, and we add value to those assets. We then monetize that investment, crystallize it, monetize it for shareholders, and you'll see the progress that we're making on that by looking at how our balance sheet has evolved over time. So in that sense, in essence, it's actually a very, very simple business. And the way I spoke to a lot of individual investors, and I said to them, look, one way to look at us is like a portfolio invested in mining. You probably like lithium, you probably like uranium, you quite possibly like gold and silver as well, and copper and nickel and so forth. But it's very difficult to navigate which are the ones to buy, and which are the good ones, and so on. We're trying to do that job for you. We've got investments in all of those commodities, and you can look at us as a portfolio bet, if you like, and a way to be invested in all those areas. So it's a lot of people look at us as it's a great play on junior mining, and we've got diversified risk, but we've also got the opportunity for fantastic upside. So if any one of our commodities were to make a discovery, for example, wow, you're in great shape. if we're able to make, even if we don't make huge discoveries very regularly, we're able to add value through, as I said, through the growth of our balance sheet and through our ability to crystallize our value. So it's something that I think is suitable for a lot of smaller shareholders. Hopefully it's a relatively stress-free investment, as I mentioned, from that point of view, in terms of the diversified risk, but one that offers a good amount of upside when the market recovers.
Yeah, that's good. That's good. And then for those of you watching, I have a video on how you can sign up through interactive brokers, and you could buy stocks on the London Stock Exchange, as well as Australia, Canada, and many others. So be sure to check out that video if you're wondering how to get access to Power Metals resources on the London Stock Exchange. I will link to the video in the description so that you can walk through that tutorial and be able to invest in the company. So, Sean, appreciate you for coming on and everything. Man, it's a great chat. Great to learn more about the company. I mean, I'm about to become a shareholder. I mean, that's,
Well, it'd be great to have you. We'd love to have you. And listen, Daryl, it's lovely to speak to you again. And thank you so much for having me on. And I'm sure we'll get to meet in person again very soon. But just to reiterate, if there is any help I can give any of your listeners to better understand our business, we're happy to do that. And I'm sure we can do more of these conversations. And when we have more news about the business, it'd be great to come back on and tell people about that.
Yes, for sure. Thank you.